Okay, so this textbook illustration is exercise 4-19A. It says, Sydney Industries manufactures a variety of custom products. It says the company has traditionally used, here it is, a plant-wide manufacturing overhead rate based on machine hours to allocate manufacturing overhead to its products. The company estimates that it will incur $2,190,000 in total manufacturing overhead costs in the upcoming year, and will use 15,000 machine hours. So if you stopped right there, basically right here, these two numbers, you've got the 2.1 million and the 15,000 machine hours. This is what you would use to calculate the traditional overhead rate, and that's what you're going to have to do in the first part. Now, second part of the problem says, up to this point, hazardous waste disposal fees have been absorbed into plant-wide manufacturing overhead rate and allocated to all products as part of the manufacturing overhead process. It says recently the company has been experiencing significantly increased waste disposal fees. So what that basically means is that's part of overhead. Your overhead costs are starting to increase is what's happening here. And basically, as you're going to skip down, it says the company's management wants, and of course, obviously this has an impact on profits. It says company's management wants to implement an activity-based costing system so that managers can know the cost of each product, including these hazardous waste disposal costs. Expected usage and costs for manufacturing overhead activities for the upcoming year are as follows. So they give us basically, in this case, it looks like we've got three categories, 1, 2, 3. And notice here's that 2,190,000. Notice that's the same 2,190,000 they mentioned up here above. What they basically did was they took that and they allocated among three different activities. So you split that up. We've got the activity bases right here. So when we do the activity-based costing, we'll simply be dividing these individual overhead numbers divided by these individual bases. So you'd have 600,000 divided by 15,000, 270 over 3,000, 1,320,000 over 4,000. Now, down below it says during the year, job 356 is started and completed using usage for this job is as follows. And on the next slide, we'll finish it. But basically, this is your setup. And so, requirement 1 you're going to find is going to be use the traditional overhead rate. And the second part is going to be to use the activity-based rates. So up here at the top, before I get to the next slide, what we can do is you can take that 2,190,000 and go ahead and divide that by the 15,000 machine hours. What that's going to give you is a rate that's right at $146 per machine hour, okay? You'll need that in the first part of the problem. Now, when you go to the second part, when you go to get the overhead rates down below here, let's go ahead and do that right here. So you basically will take each of these numbers and divide by these activity bases. So 600,000 over 15, that's going to be $40 per machine hour. For the engineering, it's 270 divided by 3,000. That's going to be right at 90 per order. And then the last one with a 1,000,003 over 4,000, that's going to be right at $330. This is per pound of hazardous waste. So these would be the rates you would use for ABC. Contrast that with the rate you're going to use for just the manufacturing overhead. Now in the next part, we're going to use these rates to calculate the cost of this job. We'll separate it just like we've been doing before. We got product cost number 1 with direct materials, direct labor, and then we'll do the overhead, and then we'll compare how the cost is going to be different under each of them. Okay, so for requirement number 1, of course, we already got the rates. Let's just basically get to it. Let's get to the product cost. So we've got number 1, direct materials, which is given, in this case, it says it's given at $300, 300 pounds of direct materials at $70 per pound. And so basically, if we multiplied that out, the 300 times the 70, that's going to be our direct material cost. So in that case, that would be $21,000 product cost, number 1. Number 2 says direct labor hours, 20 hours at $25 per hour. So again, 20 times 25, that's going to be just about $500. That's your direct labor cost. And then finally, overhead. We know that the rate we just calculated was 146. That was overhead rate. You're going to multiply that. Again, it's based on machine hours. Multiply that by 90 because it's, again, traditional rates based on machine hours. And that's going to put you right at 13,140. If you add these together, you get 34,640. So that would be the cost of the job under requirement number 1. Under requirement number 2, same thing. Under ABC, the only thing that's going to change is the overhead. So over here off to the side, let's calculate that, how we would come up with the overhead cost. And so we've got, looks like 90 machine hours, 9 change orders, 50 pounds of waste. So to get this overhead under ABC, we take the 90 machine hours and we're going to multiply it by the rate, which was $40 per machine hour. We got that up here. Remember, just to remind you, that was the $40 we came up with. That's the 90, and then that, of course, is the 330. We're using these rates to do the allocations. So 90 times 40. For the change orders, it's 9, again, times the 90. And for the hazardous waste, it's going to be 50. To multiply that out by 330. So to save a little bit on space, you multiply these, you add these together. That's going to be a total of 16,500. That's going to be the overhead once you add these up. So therefore, the direct material, you have direct labor, you have overhead. We can compare these. We still have the 21,000 of direct labor. I'm sorry, direct material, 500 of direct labor, and now overhead is 16,500. And notice what happens to the cost. 42,410 is our cost versus 34,640. So clearly, if they're having issues on profit margins, you can see that the problem is they're not probably billing enough to their clients to cover their true cost. And so the ABC would affect how much they bill the clients. It's going to increase their profits. It's going to help them basically stay in business. Okay, so again, this is exercise 4-23A, and we're going to be using activity-based costing to allocate manufacturing overhead. So as you read through the problem, I'm not going to read it all step by step, but basically what they give you is this opening data right there. They've already given you all the budgeted information. They've actually already calculated the overhead rates for you. So I'll come back to that in a moment. But then down below, they give you that they got the 2 products, the standard and the deluxe. They basically give you the activities that go into making each of these products. And then finally, another thing that's going to be very important is the fact that you need to know that they are going to be producing 1,000 units. Now, in the next slide, we'll walk you through the requirements. Okay, so the first requirement is part 1. They want you to calculate the total budgeted manufacturing overhead cost for the upcoming year. And essentially what you have to do is they're making you work this backwards. I tend to not have you do that, but I'll show you how they get to that in a moment. And then once you do that, then part 2 basically says they want you to compute the overhead cost per wheel. So you're going to have to take these rates way up here, and we're going to allocate these to these 2 products. And then the third part is they want you to get the traditional plant-wide overhead rate and then to allocate overhead using just the 1 rate. So essentially we're going to be comparing ABC versus traditional costing, and on the next slide I'll show you how to get that. And again, we're basically pulling all of the data up above. Okay, so this is actually the solution, but let me walk you through this first part. This is the part they're actually having you work it backwards because they did not actually give you the total budgeted overhead. Again, what they gave you is they gave you these overhead rates right there. Now, the way they're having you do this is you're basically going through the 4 individual activities they've identified. They've already given you these standard numbers in the problem. And so what they're basically doing is they're coming up with the budgeted quantity. So they took for materials handling, they took 6 times what you produced, 6 times 1,000 plus 8 times 1,000. And again, that number you need to know is what you produced. They came up with the base of 14,000. They multiplied that by the rate, to get 53,760. Okay, so again, they would have already known this because they calculated the rate of 3.84. They're just basically having you go backwards. Same thing with machine setups. There's 20 for each of them. So that's 40 times that rate of 330 gives you a total budgeted overhead of 13,200. Inspection parts, again, same idea, 6 times 1,000 plus 8 times 1,000. There's your 14,000. Again, it's the same idea because they got the same base times the rate of 30. They had $420,000 there. And then for the finishing, it was 1.2 hours and 3.3. Again, notice how they multiply these by the production. That's the total quantity times the rate they gave you. Backs you into that overhead number. So the total plant-wide budgeted overhead is $729,960. You'll need that again for the third part as well when you get the overhead rate for one rate. Now part 2 is that's your ABC. Part 2 is you're taking these rates right here and then you're applying them individually to the standard and to the deluxe. Now again, they already essentially gave you the data. Okay, they gave you had 6 and 8, 6 and 8. Notice the materials handling and the insertions were the same. The finishing was 1.2 and 3.3. The setups you had to divide by 1,000 because you want it per setup. So you did a little converting there, but here's your individual activities tied to the production of each. Here's your base rates right there that again, you already got those. You have to multiply these by these individual activities. And then over here, these numbers will represent the allocated overhead. And then so that's for the standard and the deluxe. You then add these up. You got standard is 274 and the deluxe is 455. Now, part 3, to compare this to the traditional costing, you took that one budgeted overhead number way up here, 729,960. You're going to divide by the total budgeted direct labor hours, which they make you calculate. This one's kind of tricky. So it's all based on production. So it's 2 hours and 3.3 hours to make a product. You have to multiply that. Again, here's the standard. There's the deluxe numbers right there. 2 times 1,000, 3.3 times 1,000. Here's your estimated labor hours. You divide. That would be for the overall plant, 137.73 per direct labor hour. So then when you tie that back to the standard and the deluxe, you take your rate. Here's your rate times the activity of 2 hours to make a unit and 3.3 hours to make a unit. And you can see how these numbers right here using one rate, how do they compare with the ABC? And you can see how standard, it's about the same for standard. The standard was 274 for ABC and 275 for the one overhead rate. And then of course, if you look at the deluxe, look at how that went. It was 455 versus the 454. So in this case, you might make an argument that you may not actually need ABC because it looks like they're really capturing most of the cost, but essentially here's the differences you can see. And even sometimes because of volume, even $1 or $2 difference sometimes can make a difference in your final decision on product costing and product pricing and placement. Okay, so 4-24A, that's a continuation of 4-23A. And again, what they're going to have you do is they'll have you compare ABC versus the traditional costing. And notice for standard and deluxe, notice they got the sales price, we have direct material cost and direct labor cost per unit. So if you read between the lines, this is basically product cost number 1, that's product cost number 2. You already calculated product cost number 3, at least most of it, back in 4-23. We'll get to that in a moment. But essentially what they want you to come up with is the gross profit, if you're doing ABC versus the plant-wide allocation. So of course, before you can do that, you need to know the cost. So again, your basic setup will be, you'll have direct materials plus direct labor plus your overhead. You'll do that for both the standard and the deluxe. So you'll come up with a product cost. And then of course, that's your cost of goods sold. You'll then take your sales price minus your cost of goods sold. That'll give you your gross profit, and then you can compare for each of these how ABC compares to traditional costing. But again, your basic setup is direct material, direct labor, overhead. They already gave you direct material, direct labor in this one, and we calculated the overhead in the previous one. Now we're just going to combine it. We want to get the cost for each of these products. and then we'll look at the profitability, and we'll look at that on the next slide. Okay, so like I said, you basically already have all the numbers. You just have to put it all together here. So here's your ABC summary, and again, you have all this in Blackboard, but again, here's your direct material, direct labor, manufacturing overhead. Again, this is from 4-23A. So they added up the 3 product costs. So for each of these, for standard and for deluxe, there's your cost to make. And then, of course, for profitability, you got the sales price given. You simply subtract this as your cost. Notice sales price minus your cost of goods sold. So look at your profitability, your gross margin, gross profit for each of these. For standard, it's 66 bucks, and for deluxe, it's about 64, 65. Now, for the plant-wide overhead rate, again, we already know these numbers because we already calculated them. It's notice the direct material, again, product cost number 1, 2 are the same, 34, 45, 10, those are the same for both. The only thing that's going to change is the overhead number, and again, go back to 4-23 for the one overhead rate, it was 275 for standard and 454 for deluxe. You add these up, and of course, there's your cost of goods sold per unit. And then down below, you can look at your profitability in terms of your sales price. Notice for standard, it's at 65.44, and deluxe, it's at 65.99. And then you can basically now start to compare these two in terms of your profitability. And they're minor differences, but sometimes even minor differences do make a big difference in decisions for the company. But watch the formatting: direct material, direct labor overhead. It's essentially, the same idea that we did before. It's the same cost flow. Notice always also that direct materials and direct labor are the same for both methods. The only thing that's going to be different is how the overhead is allocated, and that's basically the difference. Okay, so this is exercise 4-28B. We're going to be comparing the traditional overhead rate, one rate, with departmental cost allocations, which again, that's very similar to ABC. So let's read through this. We've got Davidson's Fine Furnishings. They make upscale custom furniture. They currently use a plant-wide overhead rate based on, here it is, direct labor hours to allocate its $1.1 million of overhead to individual jobs. So here's your estimated overhead right there. The owner is considered refining their costing system. They want to use departmental rates. They've got machining department incurs $600,000, and the finishing is $500,000. Notice 605 gives you back up to the 1.1. So they're basically splitting that between the two departments. They've identified machine hours as the primary cost driver for machining, and direct labor is for finishing. So pretty important information. Get that done in the first paragraph. We've got a couple jobs here, jobs 450, 455. Both incurred a total of 5 direct labor hours, so they give you the activity. Job 450 has 1 machine hour, 4 direct labor hours in the finishing department, and since the other direct labor hours occurred in machining. Job 455 incurred 7 machine hours, and you can read through the rest, but basically here's all the details of the job information. Requirements are: Part 1, get the plant-wide overhead rate, assuming that inspect incurred 21,000 hours. So again, you'll take the 1.1 million, divide by 21,000 to get the overhead rate. Again, I'll show you on the next slide the actual calculation. Part 2 says compute departmental overhead rate. So again, notice they give you the expected activities there. We'll take the 600,000 and the 500,000, divide by these respectively. So that's part 2. And then part 3 will be allocating to the jobs based on one rate. Part 4 is going to be allocating to the jobs based on the departmental rates. And then basically you do the comparison in part 5. So again, here's in requirement number 1, they gave you that estimated overhead in the beginning. They gave you the estimated labor hours. So the plant-wide rate is $50 per hour. In terms of the departmental rates, they already told you the problem. They took this 1.1 million. They split it between machining and finishing. Notice the 600 and the 500,000 adds up to 1.1, just so you can tie that back. They also gave you these two estimates. Once you divide, you have $41 per hour for machining, and the finishing is $28 per hour. So that's parts 1 and 2. Requirements 3 says you want to do the overhead allocation based on just the one overhead rate. That's pretty simple. You just go to each job, because everything's based on direct labor hours. You just have to ask yourself how many direct labor hours were for job 450. The problem said 5 hours. You multiply that by $52. That job's going to get $260 of overhead. For job 455, again, they said the same thing. It's 5 hours. $52 per hour is the rate, times 5 gives you $260. Notice exactly the same overhead is being allocated using the single overhead rate. So then in the next slide, we're going to walk you through how you use the departmental rates and how the overhead allocation changes and how it's going to be actually more accurate because you're tying a cause and effect into the problem. So again, part 4 is your departmental rates. Again, job 450, 455. So for machining, it was 1 machine hour times the rate of $41 is $41. That was for job 450. For finishing, it was 4 direct labor hours times $28 per hour. That's 112. You add those together, you get 153. For job 455, again, it's 7 machine hours times 41. You get 287. It only had 3 direct labor hours times 28. That makes it 84. You add those together, you get total allocation of 371. You can see how already you're getting different overhead allocations using the departmental rates. And then of course in part 5, if they use 125% of cost, obviously that will affect your profitability because essentially you're going to be using a different cost number, and so therefore your pricing will be affected. It's going to affect the consumers, and it's also going to affect profitability depending on which system you're using. In some cases you may not be charging enough to cover or to recoup those costs.